Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts, like the chart behind me, which is of AMC Entertainment, ticker symbol AMC. So, I want to do a quick little follow up on the video I did just about 4 days ago on AMC breaking a level. Something happened in that, following that video that I wanted to follow up on. And also because, that one got a good amount of views, 507 views, also a lot of comments. I will respond to them either today or tomorrow. Sorry, I'm falling a little behind. But yeah, wanted to kind of return the favor from those views because this video I did on Weeble as well as the ones on Neo, they've been kind of dwindling. So wanted to repay the favor and come back to the chart. And the thing that did happen with the chart that I talked about in that video was a 7 count. And so you can see that here where we have 7 red candles. And now we've potentially started to see a bounce or a bottom or a reversal. I think that this is all probably hopium. I've got to say that before I really dive into it. But there are some things that do stand out to me. I also think that there are some opportunities that can be taken advantage of with options, specifically with selling puts. And so I'll talk about that. But yeah, I did just want to go over the chart. And so the thing that stands out to me about this is, number one, that 7 count. As, the price is coming down, the spread of these candles is fairly consistent. But with that, we do see volume increasing. And so that suggests to me that buyers are starting to step in down at these levels. But, I could be wrong about that. Also, we do see going from this wider spreading candle to, doji here, that the volume did drop off relative to that previous day. And so they are moving in concert. There is no divergence with larger volume behind a larger spread, smaller volume behind smaller spread. And that is continued into Friday, September 5th's candle there, where we did close at, it looks like $2.75, being below $3. And so $3 is a very important level in my view, and that's going to be because of max pain, because of options. So what we can see here from Unusual Whales, by the way, they do have a sale going on until September 10th. If you guys are interested, I think it's a great tool. I have the annual subscription. They don't pay me to say that or anything because I'm a little influencer, a little content creator. I just like the tool. And but what we can see here with the max pain is it's $3 from top to, basically bottom. There are a few, variations in that, but, up until, the middle of October, $2.50 there, but $3 up until that. And that's actually going to be a very important number that I want to talk about regarding selling puts. But before I get into that, since I think most of you don't really care about options, I'm going to come back to the chart, show some things that stood out to me that you might be able to see. Actually, you can't see with it zoomed in like this. But in that last video, I had talked about this green line here at 279. We did close below it, for 4 days. So really not looking so good. But this could also be a fake out breakdown. And it could be an opportunity. But it could also continue to the downside, as if we do take a step back, this increased volume that I was talking about, it's really not that much. So we could just see this continue to bleed. Maybe we're just forming a bear flag, taking a break before continuing lower. So that's good to consider. But if we do see a surge in volume, maybe corresponding with the Fed announcing rate cuts, I really don't know. That would also be good for AMC's debt if they wanted to refinance something like that. So I think that would actually be really good for AMC, the business. Although, I think it's really bad that they have so much debt. And I don't think that, for me personally, you do you, but for me personally as a man, I feel like, I don't want to see any new movies coming out because I feel like they're all just, man shaming or, toxic masculinity, stuff like that, girl bosses. I really don't like them that much. And the runtime for movies in theaters is pretty short. But I don't have a thing to pull up about this. But I don't know if you guys saw or have seen or plan to see, if it's still in theaters, Teenage Mutant Ninja Turtles. But that was just supposed to be in theaters for like 3 or 4 days, I believe. But then they've extended it to multiple weeks. I saw it the first week, and that brought back memories to my childhood, what movies used to be like, where they used practical effects. There was no CGI in that. You could even see one of the actors' mouths opening up, and I believe Donatello's mouth when he laughed. And yeah, it was just like gritty, but it was appealing to children as well as to adults. I just love that. We need to see more of that, more old releases coming back, showing kids today what movies used to be like and what they could be like if we stop with all this virtue signaling and, whatever. But anyways, sorry about that. You guys probably don't care about my opinion there. But, I think that that's been hurting AMC. Things spend little time in the theaters, go straight to streaming. I fall asleep when I watched The Matrix last night at home. I fell asleep while watching it. And yeah, I don't do that in a movie theater. I put my phone away and I enjoy. And so I think we need to get back to that. But anyways, back to the chart. This might stand out to you. It stood out to me when I was looking at the chart. This white line here, I was thinking, hey, maybe that intersects with the bottom here. What's that line originate from? And so if I do take a step back, it goes back pretty far in time. Actually goes back to the approximate, it's like a doodle of a line. It's not pinpointed to the levels, but this goes back to April 16th of 2024, right before we had this big move up in May. And so, I think that's a pretty important pivot point. We can actually just zoom in on the chart here to take a look at that. I got to get that candle out of the way there so we could really zoom in on it. And yeah, so it looks like that level, I perhaps have it pinpointed to the open of that day, which was $2.44. So let's just see $2. I'm going to pinpoint it just for us so we can see that. And but yeah, the other pivot points are going to be, or the other pivot point is going to be a little bit wonky. See, we didn't really test it, at all following, the big move or leading up to the big move here. And it took us quite some time. I was doing videos every day every week in 2024, just super boring. And, it's all hopium. We can't catch a break. But then, eventually we will intersect with that line again. This is the daily chart, so maybe it'd be more efficient here. This is that line. Maybe it'd be more efficient if I did this on the weekly. But here, we got a catch right here. That's not the pivot point though, so maybe I want to make that. Actually, there's not going to be a pivot point. Maybe I want to redraw this line. I don't know. No, it intersects pretty nicely right there. You can see with the open over here. So we had some wicks below. So maybe this is not like the best technical level. I don't really know, but you can see that right there. That was April 4th, so about a year later in 2025. And yeah, I might actually want to draw that as a trend line because very interestingly, actually, I'm going to do that. I'm sorry, I'm not going to edit the video because I'm lazy. I hate editing. But before I do that, before I adjust that, rather than extending it out, I'll draw a ray. So we've got 2 pivot points pinpointed to the opens of those days. But what we can see here in the volume, this looks super cool. Volume, the spikes in volume are decreasing and the highs in RSI continuing to go lower highs here. But then in the volume, we started to see, hey, there's a little bit of a breakout here. And so if we see another surge in volume so August 11th, we saw 41 million shares traded. And so what we saw in this little spike here on September 3rd, just under 13 million shares traded. So if we, 4x that, we could really start to see this breaking out. So I think that's really good. And we do see lower highs in the stock price, lower highs in the RSI. So there's no bearish divergence there. If we look at this going up, let's see, we do have, I'm not going to get into that, whether there's bullish divergence, because I think that's really, hopium, because we haven't necessarily started to form a bottom yet. It's just maybe we're starting to bounce. But yeah, the little bit of hopium that I have with this chart, let's see, actually the open over here was 260. So that's going to be easy to remember, 260. and then the open over here was 244. So I'm going to delete that line. And we can kind of do this blind to see what it looks like when I end up putting this up on the chart or fast forwarding in time. So let's see, 244. I'm not going to be able to get it like that, so I'm going to have to go back to it. And then over here, this is 260. So those 2 points are going to go up here to 244, and that was 260. And I'm just going to make sure that those are on the correct days. So this was April 16th of 2024 over here, open of 244. And then the other pivot point here was April 4th, and that's 260. And so we can see that line there, and I might, just to make it stand out from the other line that I have up there, I'm just going to color it yellow, caution, maybe it's support, maybe it's not, maybe we break through it. So good to keep that in mind. So yeah, there's that yellow line, yellow buttery popcorn, very delicious. And yeah, I mean, we can see over here, before I get to current time, my eyes haven't looked at it. I haven't made a contact yet, eye contact. But yeah, I mean, we see this. We did get a bounce here, some wicks below on April 30th of 2025 and May 5th. And then, in this time frame, we haven't retested it. And looking at, where we're at now. Whoa, look at that. Look at that. Super cool. The wick low on September 4th was at a price of 267. And we effectively, touched that line. So maybe that's some support. So I guess, if you want to draw that on your chart, this is linear on the y-axis. If I make it log, it still looks fine. But yeah, I mean, if you wanted to do that, those dates, it's based on the opening prices from April 16th as well as April 4th. So it's April 16th of 2024, April 4th of 2025. You can keep an eye on that level on your charts just to see if we start to close below that, then it's, go back to the drawing board type of scenario, because like over here, when we had those wicks below, we haven't seen any closes below that level. If I go back over here, let's see, what was the close before April 16th? That might, I just need to get that one big candle over there out of the picture. The close over here on April 15th was at 247. So even with this at 244, 247 was above that. So like we haven't seen any closes in the history of the stock chart. So I think that that's really good, but we could also, it's on the table that we make new lows. So good to be cautious of that. I don't want to be saying that, like, I think it's 238. It's burned into my memory, I believe. Yeah, 238 was the all-time low on April 16th of 2024. So, I mean, we could go back there. We could go to $2. So good to be cautious of that. Good to have a plan if that does happen. And also, we've broken below these fib retracements. I'm just going to delete them just to kind of remove the clutter because I don't really think they're valuable moving forward. But I did also want to point out this is the 50-day simple moving average, or the SMA. And so I think that's going to be an important level for us to get above and to reclaim. As you can see, we did get above it over here. So this would be in May, but then got rejected, kind of, held it as support before gapping below it, attempted to get back above, gapping above. So we have this little island gap down here and retested it, bounced, but then broke through it, got rejected with a fake out break above on August 11th, opening above at 324, but getting rejected, pulling back in. And now it also looks like we're kind of getting rejected. We did get rejected from this white trend line that I have here on both Friday, August 22nd and 25th. And so you can see that trend line, pretty simple. That is, it's a trend line, so it's not a ray with two pinpoint levels, so it's not going to be locked into place or anything. But pivot low from April 4th, that was at a price of 245, and just kind of connecting it, lining it up with the low from April 30th, which was 253, and we can see that it kind of acted as support here, broke below it here, but that was a fake out breakdown before getting rejected above the 50 SMA. breaking back below it, getting rejected from it. And so that's going to be an important level for us to get above. And currently that does seem to coincide with that 50-day simple moving average, which is both of them. It looks like both of those levels are at 301. Let's see. Yeah, so that's kind of coincidental. I didn't intend for that to happen, but I am just going to extend this, very casual trend line moving forward, because I think that that's going to be an important one for us to get above. Also that 50-day simple moving average. And so you can just see over here, I did try to keep it lined up with the low from April 30th there. So yeah, maybe we start to see a bounce. I think that we will get some attempts to get back above 3. And that is going to be because of the max pains over here, specifically around September 19th. Max pain of 3, that's the monthly contract. So I wanted to talk about, some contracts, they're puts. So don't think I'm trying to be bearish. I'm talking about selling puts, thinking about September 19th and October 17th, which interestingly has that max pain of $2.50. And so the reason why I think that these contracts are interesting is because they're monthly contracts. There's going to be more volume on them. There's going to be more open interest. There's going to be more liquidity, so easier to trade. I'm going to talk about those contracts now. One of them I do hold, which is the, actually, I guess I sold, so maybe I don't hold. So this is the $3 put that expires September 19th. It's about 12 days, or, not this Friday. Nope. Is that this Friday? I think that's this Friday. September 19th. So that's 2 Fridays from now, as I'm recording this on Sunday, September 7th. By the way, happy weekend. Hopefully you're enjoying it. Hopefully you're enjoying the nice weather and, the break before school and whatnot. Work starts up tomorrow. But yeah, getting back to this, AMC $3 strike put for September 19th. So for me, I sold one of these a little while ago for 42 cents. And so the way contracts work is each contract represents 100 shares. So 42 cents times 100 is $42. And with this $3 strike, I sold a cash secured put. So I had to have $300 in my account to secure that put. And by the way, I'm talking about this because I think this is a good strategy to accumulate shares rather than buying them spot, or based on what it's trading. I think it's better to be selling cash secured puts to accumulate more shares. And that's kind of what I'm doing moving forward. And so I sold one of these, like I said, for 42 cents. So I got $42, but I had to have $300 on the side to secure these puts. If it closes below 3 on September 19th, I have to buy those 100 shares for $33. So it's $300, but I get that $42 in premium. And so that results in my buy effectively being at $2.58 because that's $300 minus $42 equals $2.58. And so I think that's a better way to pick up shares cheaply, but also, I want AMC to go up. So if it closes above $3 on September 19th, then I get my $300 back, and I also collected that $42 in premium. So I think that's awesome. But if it closes at like $2.99, I then don't get my $300 back, but I get 100 shares. Having gotten $42 in premium, I'm buying shares effectively at $2.58. So I think that's just like really nice. I mean, the low here from September 4th, on Thursday, the low is $2.67. So like, when was the last time we had an opportunity to buy shares at $2.58? And so the last time was May 5th. We just got a wick down, open and closed above, but a wick down to a low of 257. So like 258 to me, that's like, that's pretty good. Getting shares at that price rather than buying them just, sub $3 or whatever it is. I want the stock price to go higher. I do think it's going to bump into some resistance around $3. And I also imagine that market makers want to be keeping AMC, below or right around max pain. probably a little bit below, but maybe we start to close above 3, and then that's great. The shares that I do hold, which by the way I do sell covered calls on, strikes 8, whatnot, ideally around 8 because I think that's my average share cost. But yeah, I mean, I just don't want to be throwing more money into AMC unless I feel like I'm getting a discount, because it's just been like a really painful hold this entire time. And yeah, but I also, don't want to be, I don't want to be selling at a loss. I just want to be chilling. And so like selling cash secured puts I think going to be a good way to either accumulate more shares or just capitalize on price being below $3. And so this put that I'm talking about, the high price for this, the high premium on Friday, September 5th was 36 cents. So that's like $36. So it's like a $36 discount or 36-cent discount from $3. So I'm not the best at mental math, so that put it at like 264. So that's a little bit of a discount considering that it's trading currently at 274, in the after hours from Friday. We'll have to see where it's at in the overnight trading tonight. By the way, I am going to be doing a ticker request live tonight. I'll put out a link in a little bit. I didn't want this video to be this long, but I think, the more information, the better. And so that's kind of why I tend to ramble. I hope this is helpful for you guys. Continuing on with this, I don't know that this is the best contract anymore because we're getting so close to September 19th, just being 12 days away. And so my strategy is I'm going to wait and see what happens with this contract. I've just sold one cash secured put. And so I'm just going to see what happens with that. If I get my money back, then, I'll consider doing something else like this. If I don't get my money back and I get assigned, I'll pick up those shares and maybe I'll consider doing the same type of thing. And so the same type of thing would be like looking at the $3 put that expires in October. So October 17th. So that's the monthly contract, about 40 days from now. And so looking at that $3 strike, that means you got to have $300 in one's account to sell one of these cash secured puts to then collect a premium. And so what's that premium? And so currently, or I guess I should say the high on Friday was 42 cents, as you can see right here where the cursor is, 42 cents. So that's just like what I did with the September contract. I could sell, one cash secured put for $300, get 42 cents back times 100 shares that this contract represents. So I'd basically be getting a $42 discount on that $300 order, picking up shares if it closes in the money, so below $3 on October 17th, and that would be at $2.58. So just like what I'm doing now, but for September, this is for October. But if we actually look back on September 3rd, we can see that the high was 50 cents. So I don't plan on doing this, but if I were to, want to pick up more shares more aggressively, I'd place limit orders with a limit of 50 cents. So with $250 on the side of my account, or however many of these contracts I wanted to pick up, and so I could then basically spend $300 on securing these puts with that $3 strike that expires in October, and then I get $50 back in premium. So I'd be having to have $250 in my account to secure those puts, and then I'd be getting shares at $2.50 on October 17th if it closes below $3. But interestingly, looking at the max pain for October 17th, it is $2.50. So maybe the $3 strike is not the best strategy. However, I don't think it's a good strategy to be selling those cash secured puts at a premium that is less than 50 cents because that max pain is $2.50. So what I might do here is I might actually pull up the put, so we got this here. I'm just going to change this to $2.50 and I might add that. And so we can also look at that one. This is actually really interesting because, it's $2.50 put, expires in October, just like the other one, 40 days between now and expiration. And, the premium's like 10, 12 cents, whatever it is you see down here. And so that would be like, I need to have $250 in my account to secure these puts. And then I get paid, like, let's say the high here from Friday, 12 cents times 100, that's 12 bucks. I get $12. So I would be effectively buying 100 shares, or I'd be exposing myself to 100 shares, risking, is that 238? That's $2.50 minus 12 cents, $2.38. So I need to have $238 in my account. And if AMC closes above 250 on October 17th, then I get that $250 back and I made $12 in premium. If it closes below $2.50, then I end up picking up shares effectively at a price of $2.38 because it's $2.50 minus 12 cents, $2.38. So I think that's the better way to be picking up shares right now. But I also have to say that looking at the data over here, the net call and put premium, I don't think this really looks that good, to be honest. And the reason for that, you might see the green up, which is net call premium, the red down, which is net put premium. So that is bullish. If we look at the bear bull slider here, it is more in the favor of bulls. But the reason why I don't find this too compelling is because if we look at the numbers over here, they're tiny. They're not even over 100,000. So what we can see is the net call premium in green going up. And this is just for the data on Friday, so September 5th. We can see net call premium increased by 99.11 thousand. So $99,110. That's not really a lot of money. That's not big money. That's not a massive momentum shift. If a YOLO is $10,000, this is getting 10 degens in a room, all of them YOLOing. That's not a big deal. It's not moving markets. And, 10 degens, they're like, the sheep, we're retail. We're like the sheep. So I don't think that's too compelling. But we do see the net put premium that's negative. As we can see, the red line is down here. So that is good. This balance is good with the green going up, the red going down. But it's only 61.74 thousand negative. So it's not a lot of money. That's 6 degens betting against it, YOLOing on it. So I am not too compelled by the amount of money behind these changes in premium. And then if we take a step back, I'm just going to, I guess I'll go back the past 7 days. We can see that as the stock prices come down in yellow, maybe it's starting to bottom. We are starting to see net call premium go up, like I was just talking about, net put premium go down, like I was just talking about. We also saw net put premium over here on August 29th. Coming down, and that net put premium ended the day negative 120, nearly 126,000. And so that's good. It's above 100,000, but it's not millions, so it's not like super huge money, But this is the trend that we want to see. We want to see the red going down, the green going up, as the yellow, the stock price starts to bottom. And then if we go back the past 30 days, this is, I imagine, like retail FOMOing into price going up. This was, a good buy, I would say, because price went up over here. But let's see, on August 8th, we saw net call premium increase by, you might think this is like millions of dollars, but it's not. It's 628,000, almost 629,000. So that's good. But we want to be seeing this, over here. We want to see this get into the millions, and we're not seeing that yet. So that does make me think that AMC could still be going lower. But yeah, I would really keep an eye on that trend line here. I might just switch it over to the weekly so we can, maybe see that a little bit cleaner. We're potentially at support, putting in higher lows, but maybe not so much. And to be thinking about higher lows, actually, before I jump into that, looking at this on the weekly, this hammer candle looks pretty nice there. So it would be great if we saw, let's see, where is my, I'm not too familiar with how to draw stuff up here. I just want a box. I believe maybe here. No, box might be in the, no, I don't want an emoji. Pen tool. Yes. Okay. Rectangle. So like what I would like to see for next week is, kind of a green candle. So I'll make that green right there. I'd like to see something like that. Crap. I got to make the filling green as well. And I'll make it, let's see. That's what I want to see. This is just a drawing. This is not real, but this would be, I think, a really nice reversal signal in the coming week. We see this red candle come down, a hammer candle with the wick to the downside, suggesting buyers stepping in, although we haven't really seen that in the volume. So if volume starts to step in, we see a reversal like this, getting up to that 50-day moving average. That should be fixed on the daily. You can see over here it says 1 day, 50 days. So it's not changing based on this being the weekly chart. And so I would like to see a move, us closing next week around $3 on Friday. I think that's September 12th. Yeah, I mean, looking at this, higher lows, I was going to mention that. The low over here that we want to be staying above, May 5th, the low for that week that ended whatever that Friday was. The low for that week was 257. So we want to be staying above 257. If we do wick below this yellow line, that is no big deal, but we don't want to be closing below it. So make sure you draw that yellow line on your chart. Again, I'm just going to switch back over to the daily so I can pinpoint, show you this. Those dates are April 16th. The open on that day was 244, and then over here, and that's April 16th of 2024. Over here, Friday, April 4th of 2025, the open was 260. So you can pinpoint array 2 levels on your chart. Keep an eye on that line. If we close below it, that's kind of, a break of trend. And if we respect it, that is maintaining trend, that this is support, and that we could start to see rallies towards 3 if we start to close above 3, and specifically around October 17th. If we're closing notably above $2.50, then that could trigger maybe a gamma squeeze or gamma ramp, something like that. If we continue, to be like above 3, above 350, that could be looking really good towards the end of the year into the beginning of 2026. But yeah, I mean, I think that if anybody is buying shares of AMC, they should use cash secured puts to buy no higher than $2.50. I think that's a much smarter way to accumulate shares and or to collect premium. And then that premium that's collected could go into buying shares, something like that. So I don't know, you do you, whatever strategy works for you. But I just think that AMC has been such a bummer to hold for these like 4+ years. And yeah, I know that we're all here. We want to be making money, but we also, like my little rant in the middle of the video, I want to see movies go back to the old days, like Teenage Mutant Ninja Turtles, and just, Alien, like Alien Earth. I've seen a bunch of reviews from Critical Drinker. I don't know if you guys follow him, but it's just, from what I understand, such garbage. The writing, the virtue signaling, all of that. I want to see a return to great movies in the theater for at least a month long. I really wanted to see, I think it's Primitive War, but where I live, it was only in theaters for like a week and I missed it. And so, I really want to see, like dinosaurs eating people. I don't want to see baby CGI dinosaurs. I want to see, like Vietnam War, Green Berets getting eaten by dinosaurs. I think that's cool. I think that we need to see more of that. We need to support those smaller budget independent films because that is where the real art is in cinema, not the massive CGI exploiting franchises and stuff like that. But anyways, enough rants, enough tangents. As always, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more long form videos discussing my thoughts on stocks like AMC. I will be doing Ticker Request Live tonight, so make sure you tune into that. I don't have to work early in the morning, so we should be able to have some fun for more than just an hour. But anyways, thank you so much for watching. Hopefully your weekend is great. You got a nice week planned up ahead, and I'll see you in the next one. Take care, you guys.